All right, we're going to jump right into the Nasdaq 100 and the SP 500. We're going to go over exactly how we're moving and three major bullet points we need to be talking about what's going to draw this market and why I believe after this week, we will start seeing true movement on the market and a lack of manipulation going forward. Before we get into that content, I ask you to consider doing two things: liking and subscribing. Go over these videos every single day so you can stay prepared and stay ready. Now let's get right into it. So the few things I do want to talk about is specifically going over the SPY and Qs. We have seen the separation among these over the past few weeks, if you will. We've seen tech heavily being hit. I'm going to go into exactly what I'm looking for this week. Now, when we go over these bullet points, there's a few things I do want to highlight. I do believe the midterms will be the biggest factor. On November 8th, that will be the end, if you will, of these midterms. And I believe this is heavily why we're seeing a lot of this manipulation, specifically on the oil sector and the energy sector overall. We've also seen a lot of impact on cannabis as well. I don't think that you're going to see a lot of cannabis going forward after this. I don't think it's going to be as big of a focal point. Again, they're doing anything to boost their chances of winning midterms, the Democrats specifically. And this is not me being against Democrats, me being against Republicans. It's just who's in office. If it was Republicans in office, I'd be saying the same thing for them. It's just trying to keep the market afloat. And I do want to highlight something really quick here. If you go to NQ, we're getting to a very interesting point right now. And I don't think people are really considering where we're at. If you look at when we actually, Biden came into office, just being realistic, I'm just saying, you're coming to the point of concern if you're Biden. This is ultimately where you come in. We'll say right here, January. Well, I'll even give you the lows here of March. This Biden was already in February and March, but it doesn't matter. You're below those levels now on the Nasdaq. Yes, you're there as well. You're in pain, right? If we come and just bring this over, you have got to be concerned now. Because if you look at what's happening here, in my opinion, you're basically back and the economy is worse than it was when it was handed over to Biden. And they've been thriving and saying the market's been pumping, it's been doing this, it's been doing that. Well, spoiler alert, you've come to the end of that road. Next up, we got Fed rhetoric and Thursday CPI. Now, why is this so important? Because one, this is going to be done. Midterms done, no real reason to hold the market afloat, no more reason to spread any type of nonsense, which I do believe the Fed has done a really good job of separating himself from the overall viewpoint of the Dems and politics in general. I would say there's still some areas that could use some work, but that being said, Fed rhetoric, which I'm going to talk about here in a second, but Thursday CPI, I think will be major, maybe the most important factor on this week, because what Powell said, rates will not slow down if the data does not show any type of, cooling, right? And Thursday CPI shapes that up. Fed rhetoric. Now, I don't know if we're going to have as many Fed speakers this week, but what the Fed was saying last week was extremely important. If you're not following on Twitter, I recommend doing so. The link is down below, but I cover all that through Twitter throughout the day. Now, Fed rhetoric here. This is very important because the Fed will say, yes, we're going to try to lower, these rate hikes down the line. It makes sense to do that. And they're not lying to you. They eventually will. And that's what they're saying. And they said there's no indication of doing it anytime now. So it's very important that you listen really closely to what the Fed is saying, underlying factors. We're going to talk about a lot of this here in the video. This is probably some of the things that we can start seeing right now. The DXY, yields, earnings that are coming up this week, China COVID policy and supply chain. This is going to be an underlying big issue on the week. Also, if you don't know China, what they're doing with COVID, who knows really what's happening over there, but this is a big issue with them shutting down. We've already seen it happen to some Apple factories and Tesla. This has already been happening to some of the big companies. So this is going to be a major player, and this is why Tesla dropped because of the UK news. Apple started dropping because they're closing their factory for 7 days. Okay, so you're seeing that being affected. I didn't want to misspeak, so I want to make sure you already are seeing the effects of this. Now, DXY, this is going to help you with charting, and we're going to get into that. So let's break this down. We have a lot to cover. Before we even get to those, S&P and the Qs, I want to talk about the dollar and what's happening here. Now, on Friday, I did cover this on Twitter. I made it very clear. If you're not following on Twitter, I recommend doing so. You can see all this information here over 20 hours ago. So going into this chart, what happened? basically, as the market started dropping, we saw the DXY bounce from our lows down here, right? That was the beautiful thing. We saw that beautiful bounce. We mapped it on Twitter. We mapped it out on YouTube as well. And you mounted every level. You pushed up, you held the support, you pushed up even further, you came back down, held support again, you mounted the next support, boom, you mounted again, boom. Now, this is all the way through essentially Thursday. Then Friday hits us. And we start seeing this Fed kind of talk about and manipulated talk, if you will, of them slowing down rate hikes. Now, we saw the dollar get hammered, go through 3 major levels, and you're at that bottom one right now. If you go any lower here, I would have to suspect you bounce from there once again. Now, the big thing to realize is when you saw the dollar drop from here to here, we saw a massive bounce on futures, and we saw a massive move to the upside from the Nasdaq, from ES, almost 700 to 800 points to the upside. Things changed this week, though. This is where you have to start looking at, the indexes. And if you look how the indexes moved from that movement on Nasdaq and, from the dollar, I think the writing here is on the wall. You barely pushed back up. You pushed up and then you dropped down and then you pushed back up. And this is kind of my range that I have for SPY. And all things considered, with the movement that you had from the dollar, I believe there should have been, and there would have been warranted a better bounce on futures and the S&P in general. So if we look here, let's talk about what's happening. I want to talk about SPY and then go into Qs. I believe SPY in the S&P is stronger than tech and primarily Qs. So I want to give you the benefit of the doubt, more to the bullish side, if you will, here. And right now, so everyone knows, I'm in no positions except my Disney long. So actually, if you look at my bias, it may lean towards the bullish side. But I'm going to tell you where I'm looking at right now. I could see the case for some upside movement to the beginning of the week. It would make sense going into midterms. It would just make a logical sense. I do want to highlight that. Now, where you're at, you started to form a little bit of a support down here. You would have to consider this now a sort of supply where you're sitting at this level between 372 down to 369 roughly. This is a bigger, I don't like how big it is, but it just is what it is. And it's where you ranged for essentially 2 days, Thursday through Friday. Now, if we get into what's happening here, you have a very big resistance at this level. This would not be considered, this is demand, this is supply up here. I would not consider this a supply. I want to highlight that right now because you clearly invalidated this level before, which was right here. You went straight through it. There is nothing really else there. Now, if you look at where we're going and how we're moving from this, I do believe this is a major level. Previous lows established here, which were major, and then we can see that we kind of trended into this area before. So I do believe 382 to 380 is going to be your resistance on SPY. If you start to get above this level, I would flip towards a more strong and bullish thesis on the market. Okay, I want to make that really clear. If you're above this area, I think you have to start looking for upside at 390. Personal opinion. Now, if we go a little bit further and we start to look at Qs, I think the writing on the wall is a little bit different because as you look at Qs, you get a little bit more information here. And Qs are dangerously close to the lows that we have established. Okay, so if we come out here, you can actually see we have June lows. We've already talked about those quite a bit right here. So I do want to highlight that really quickly for you so you can see that. We're going to highlight those really quick. We're right about here. And we're going to Nasdaq, so just bear with me. And I was trying to do this live so you can all see where we're at. These are your levels. These are 52-week lows. These are your previous 52-week lows. It's a very similar, if you will, to SPY. You're trying to base on here, but you can see that you were making lower lows throughout the day here. If we go back to SPY, I want to make that really clear here that you were not making lower lows. Qs, again, represent a more bearish viewpoint on the market. So if you're looking at the downside potential, I believe I have to side with the Qs if I want to trade to the downside. If I want to trade to the upside, I'd be looking at more of SPY. That's my personal opinion, where I'm at there. Now, you can look at this range, and I really hate looking at the Qs chart because it's that horrible. It's one of the worst charts I believe that there is. It looks incredibly bearish, and you just never get any clear breakthrough. You can also see our previous lows that were established here to our current highs right here. You cannot get a breakout here. SPY broke out of those levels. It looked a lot stronger. So what I have to do is go to something like NQ and look at the higher time frames. And as we get in here, it becomes a lot more clear of where exactly we're trading and how we're moving. Now we can see this 1106 range are the June lows, the previous lows established from June. These are our 52-week lows and how we're moving. Now, I also want to highlight what we were looking at on Friday and how we started to trade that downside, like I mentioned on Twitter. Okay, if you look here, we saw a lot of wicks down to this area and then bouncing, right? And we also saw the area here on NQ. You came up and you made a resistance at this level, a supply, if you will, at around basically 11,000 to 10,995 roughly, right? About a 50-point supply. Really love when they get that condensed. That's my favorite area to trade because it's more exact and you can have tighter stops when you're trading this. Now, if we look at what's happening, you rejected, you made a new low, you started bouncing during the day, popping back up. I anticipated some of this movement, and just to give you a little bit of a heads up, this is when I started trimming my position, right? Going back to basically the middle of the day, around noon, 12:30-ish on Qs is when I started cutting my position, right? 9 a.m.'s here, coming into 11, noon, there's a 2-hour time period. Down here is when I started cutting, right? I started getting out of my Q position entirely, right? So I just like to show y'all where I'm doing this, why I'm doing this, so you can understand. The point of this channel is not to, give you information and rely on me every single day. Now, this is a news channel, if you will, and you should be used as an indicator, but you need to do your own financial due diligence and never take this as financial advice, right? Because ultimately you're in charge of what you're doing with your money, and people are going to come back and they look to blame everyone. But my biggest thing here is to teach people responsibility and hopefully put them in a situation and give them the tools that they can use to make money in this market, right? So if we look here, you did make lower lows and you got a bounce at the end of the day, right? So I anticipated some of that movement, and it really came back down to what the DXY and the dollar was doing. So if I'm looking here, I anticipate maybe a little bit more downside on the dollar going into Monday and Tuesday. I do expect that, probably getting another test of this area. You just have to anticipate that if you remain below this level. And if you want these levels, it'll all be on Twitter. Now, if you remain above the 110 area, I anticipate a bounce, okay? But I would have to say, if I had to put statistically what I expect, more of a 70% chance of the downside here on the dollar and a bounce on the market into Tuesday. And then looking at the dollar, about a 30% chance of getting that upside. If you get the upside, I'll be betting on downside on the market. Okay, it's simple as that. I think the dollar has been one of the best tools here. So if we look at that, that's what I'm looking at. Going into this, I would imagine you try to get a little bit of a bounce. Now, where you bounce to is the big question. You have to anticipate that you're going to break above this level. I do. Now, typically when we come into supplies, there's a 2-hour supply. I would anticipate you get rejected from this range. I would anticipate, though, going into the end of midterms, going into CPI, you get a little bit of love here because the market's going to want to see green. They're going to want to see and be hopeful that there is a turn in the market. That's what the market, in my opinion, is going to shape people to think, specifically retail. So I'd be very careful in these waters going forward. I'll be looking to day trade. I will not be looking to swing anything. If I'm looking to swing anything, it would be puts towards the downside. That's my opinion. That's what I'll be doing if I am doing anything, but I'll always be posting it here so you'll know. As of right now, again, all I have is Disney calls to the upside because they have earnings on Tuesday. I will not be playing through earnings, but I think they have upside going into their earnings just based on how they moved before. And I believe they're going to beat personally just this time. So that's my viewpoint there. Now, a lot of people have been asking for, the Dow. So I do want to cover the Dow also. The Dow, in my opinion, is the strongest of everything. If we come here in the 2-hour, it's abundantly clear how strong you are. You could come here and you really do need to come down to about the 4-hour to get a better look of supply and demand here. And I believe this would have been your area. Roughly down here to 31.8. You had a slight break, invalidating it, and you bounced back up. But the issue here with even looking at supply and demand is just how you were moving up. Because you could honestly consider most of this, and you have to go to a daily, and you get a massive range when you're looking here. If I had to, you would have to come in here and look, and it would be ultimately this whole block down here. So on the daily level, you did not break it, I will say, because this would have been your demand area down here. But on those lower time frames, you did, and you invalidated, so you bounced back up, looking really bullish. And if you look here overall, based on our daily supply level up here, you can see you're rejecting, but you're flagging here, and you continue to look bullish. That's why I continue to say, if you're looking at upside potential, I believe the best bet is to aim with Dow. I believe that's your best bet for your upside betting, right? If you want to go for the upside, bet on the calls, hedge your position, Dow is the way to go because it's just that strong. These are your previous highs you had back in August. And if you go all the way back to, highs you had back in November, all-time highs, I mean, all things considered, you're not that far away when comparing NQ and SPY. So I believe if you want to bet on the upside, Dow is your way to go. Why? It's all entirely based on what they did with earnings and how those companies hold up, because those are the ones that are thriving during this market. Oil, energy, and industrials continue to kill. Those are the safe bets. Tech is hurting tremendously based on supply chain as well as consumers being hit. So you have to understand where the market's moving and how we're going forward here. So if I had to bet on the upside, I'd be going on Dow. That'd be the one I'd be betting on upside. If I had to bet on downside, I'd be betting on NQ. Now, if you wanted to be a little bit riskier, like I said earlier, you could go on SPY, but I would not be playing SPY towards the downside. I just think that's just not the smart move right now. I believe Qs offer more upside potential overall. That's my opinion. So I do want you to remember, going into this week, this is the big points we need to be looking at. November 8th, into midterms, that's when you're going to start getting great movement on the market. Fed rhetoric, Thursday CPI, very big. Also, China COVID policy with supply chain. I think these have the least effect on the market. These are definitely the bigger and more important areas that you need to be focusing on. I'll try to keep more concise information and keep you guys posted also here on the channel. But going into the week, I would anticipate a little bit of love Monday and Tuesday. And then after that, that's where the wheels could start to fall off going into CPI and the end of midterms and elections.